I did, Pim. Earlier this morning, I spoke to the governor of the Bank of Israel. I spoke in a non-accusatory tone, and that would be Stanley Fischer. I asked the governor whether Israel was the new Switzerland and what the challenges are that go along with that new title.
We talk quite often, actually, and we swap experiences. We're a little less prominent than they are. They sit in the middle of Europe, and when the euro, people worry about the euro everywhere around, people start sending money in. Ours comes from further away, and fortunately in smaller amounts.
But all the money rushing in, the flows, it has a tinge of 1997. I was forced at gunpoint once to read your wonderful summary of the crisis of 97, 98. Are there elements here of flow instabilities or shocks of capital that could lead to things we don't see out there?
And one of the things that does concern us is you have a lot of money coming in. If opinions change quickly,
money goes right back out?
Money goes right back out, and it could go out very fast. One of the reasons to neutralize some of that by the foreign exchange is to have it ready in case opinions shift.
The Oscars were just announced, the nominations in the United States for Best Movie. You took home the Oscar for Central Banking a couple years ago, I believe, as Central Banker of the Year. What did Stanley Fischer get right in Israel?
Well, a lot of it wasn't the Bank of Israel. It was our colleagues in the Treasury. It was the private sector. The economy was in very good shape before the crisis. Strong banking system, tough bank supervision, budget in good shape, balanced in 2007, current account surplus. Almost everything was right. And then we moved pretty fast as we saw things developing. Particularly, we broke with precedent of 10 years and intervened heavily in the foreign exchange market to prevent a very rapid appreciation in advance of the crisis. We saw the crisis coming. We had a 20% appreciation. We said you can't go into a crisis with that huge tax on the export industries, which are 45% of the economy.
So Stanley Fischer led the race to the bottom. Are we having a race to the bottom right now? If we look back at Dornbusch Fischer stars in your classic textbooks, when you look at the foreign exchange markets, are we dashing to such predictable outcomes where everybody tries to depreciate at the same time?
I think the difference is everybody's trying to prevent an excessive appreciation.
That's the helicopter in the background is the Swiss National Bank's helicopter. The Bank of Israel does not come by helicopter.
I think you need in the background a big vacuum cleaner because they're sucking up the money, not dropping it down. We're all trying to prevent excess appreciation. We're not depreciating against more than the markets. More than would happen if we didn't have these big capital flows. That's a big difference. We've had an appreciation. We had an appreciation of 10% last year in effective terms. We don't draw lines in the sand. We allow the exchange rate to move. We try to moderate the movements because if you're small and you're open, and a lot of money arrives, the exchange rate can go very fast.
There becomes a rhetoric, the Brazilian finance minister talking of currency wars, Minio Fraga in an article recently saying it could get worse. I think of Barry Eichengreen's work, his new book, Exorbitant Privilege, talking about that exorbitant privilege, Giscard d'Estaing's idea of a reserve currency. Let's just get beyond the idea as the dollar at risk. What should be the U.S. response to the responsibility we have of having that exorbitant privilege?
I think the U.S. response is twofold, is to maintain the domestic value of the dollar, that is to keep inflation low and to keep the economy growing. And we were asked how we thought about the currency wars, and my attitude and the Fed's quantitative easing program, my attitude was, given the choice between not having exchange rate problems of the sort we have had recently, and having the U.S. economy growing slowly, situation A, or having the U.S. economy growing more rapidly and us having to deal with the exchange rate, I'd much rather, and the world economy would much rather have a strong U.S. economy.
I've called this the Davos of our discontent. Yes, there's a shared path to some form of reality and the usual elite walking around doing what they do, but underneath that there is a discontent. What is Stanley Fischer's discontent at this World Economic Forum meeting?
Well, before we get to the discontent, we should look back at what we're not dealing with. Right. 2 years ago, when we spoke, everybody thought the world was coming to an end. The world didn't come to an end. We're not in the Great Depression. We're very remote from a Great Depression. I think a lot of the credit for that goes to the Fed and Ben Bernanke, to the ECB and Jean-Claude Trichet, and to the G20. We now have to deal with the consequences of some successes, particularly the success of East Asia, of China, of India, growing very rapidly. And we've got to get to my discontent is that the world, the advanced countries, have not yet come back to growth. I think we're seeing good stirrings of that, but we won't know that probably till the middle of this year. And then we'd like to see them normalizing their interest rates and getting their financial systems back into operation.
Stanley Fischer, the governor of the Bank of Israel, of course, for years with Citigroup. And Pim, I'll tell you, you really nailed it there about the risk here. Not so much of money going into these countries like Israel, like Switzerland. It's what if the money comes out so quickly. One of the great insights I've seen here in our first 2 days at Davos.